Well, spotlight back on the new banking licenses, and joining me now is Sivaraman, President and Whole-Time Director for L&T Finance Holdings. Good afternoon, Mr. Sivaraman. Thank you so much for joining us on this leg of the show. First, let's start off by getting a reaction as to what you made of all those guidelines that were announced on Friday evening itself, and what is L&T Finance Holding? What does it mean for the company?
The guidelines have come in almost in line with what was originally announced as a draft. So I think there will be no surprises. The eligibility criteria have been slightly, left more open, and it is left to RBI to take a view on based on their promoters' track record and their business plan, etc., which is fair, and make sure that every financial services participant has an opportunity to set up a bank or become a bank very clearly. And for us, yes, it's an exciting opportunity ahead of us, given that this will help us widen the scope of services that we can offer to our clients and be able to participate in a larger revenue pool. Very clearly, it makes us feel excited about it.
Mr. Sivaraman, let me try and play devil's advocate here and ask you some very simple layman questions. Of course, while converting into a bank will come with its own share of growth, etc., it will also come with a lot of added regulatory requirement. For example, having 25% of the branches in rural areas, priority sector lending, etc. Will that be a drag? Is that at all going to be a deterrent for a company like yourself when you're thinking of applying for this license?
Okay, at a more philosophical level, I think large NBFCs like us are in any case supervised and monitored almost like a bank. So that from a supervision and regulatory piece, that doesn't matter really. The second piece is that our cost of borrowings in any case do factor in some of the what I would call as a regulatory cost that the banks have to incur in the form of CRR, SLR, as well as priority sector exposures. So from a broader perspective on becoming a bank, it should not pose additional handicap on us in terms of our cost of money. The third piece is that the rural areas, I think there are existing banks who also have an obligation to build a rural presence with reference to their incremental branches. Fair enough. I think that it is definitely a bit of an advantage for the existing banks very clearly. But look, if we have to look at opportunity to grow, we need to really find those areas where we can actually set up activities and build our revenues there. Maybe the competition is less there, our ability to acquire new business will be far better. The other important piece is that these kind of branches are not necessarily expensive, even after considering the kind of manpower we have to put in place, the infrastructure we have to create. So I don't see this to be a major cost deterrent or make a big difference in our overall performance situation. I don't see that to be a major challenge actually.
Fair enough. So you don't see the rural mandate as a bit of a challenge. Now this is a complete out of the box question. Would you at all think of perhaps even an inorganic acquisition, a small bank acquisition to try and fulfill this criteria? Because the RBI hasn't given you any time. They want this 25% norm followed from day one. It's not a gradual process where new banks will have time to fulfill this mandate.
Yeah, it is a gradual process. My overall branch buildup will also be gradual. It's not going to be overnight, right? We need to have the organization and network in place to really build a branch network. So that doesn't really create a challenge for me. On a completely different perspective, an inorganic opportunity is definitely interesting because it helps you get a head start, both in every respect, be it the organization, the processes, the existing client base, the branch network. Almost in every respect, it is an interesting way to look at building the business. But I would say that that's something which we need to really think about it once we have been assessed as a fit and proper person for having a bank with us, right? That's the way we'll have to look at it. I think I do not want to conclude on that too prematurely.
So Sivaraman, fair enough. In fact, just putting a little more twist to Surbhi's question itself, I just pulled up the holding for City Union Bank. 3.75% is what the latest filing shows. Is what L&T Finance has. Any comment regarding would that be something you would be looking at? Would you be approaching that?
See, whatever percentage we have, I think we seem to hold more than 4.5% on that, but you seem to have some other data. But the 4% does not give you that kind of a leverage to really think that we control the bank. Really, there are many shareholders who have more stake than what we have. So I don't think one needs to really read that in that context. But I think it's a good bank. But like that, there are also other banks which are there. But in the first place is that we need to apply for a license, get ourselves declared as fit and proper, and thereafter try to see which way to go really. So I don't want to kind of speculate here that whether there is an M&A opportunity and which one should we look at, all those things at the moment.
Fair enough. In fact, just talking about the approach as well, you've already had a couple of the other applicants or possible applicants for the banking license to announce a couple of structure, or rather just changes in the structure of their financial operations as such. At L&T Finance, will you also be taking place some kind of changes in terms of operation regarding the other financial products?
See, we are very clear that we have got about 6 non-banking entities with us. One being an asset finance company, one a loan company, other one infrastructure finance company, mortgage company, as well as a consumer financing company. So all of them are available. Of course, the AMC is an independent, separate entity. So from a pure preparation, rather having the kind of segmentation that we have, I don't see ourselves being challenged in putting this all together to become a bank, right? Of course, we need to work out the transition. That's a piece that always there in a business environment. But other than that, those which are likely to be separated out of bank are in any case separate.
Sir, would you please explain to us what kind of changes in the equity structure will be required, if at all, to fulfill the criteria of this non-operative holding company? How will this come about, given your understanding of the guidelines that were released?
So the guideline requires that the promoter set up a non-operative holding company. We need to understand the purpose or the intent behind that. The intent behind that being the need to separate and ring fence the financial holding company from promoters' other operations, which is non-financial basically. So I think we have an entity with the form of L&T Finance Holdings. If there is a need to create a wholly owned subsidiary, it may have to be, we have to think about other structures. But I think it's more of, we need to understand the purpose and intent behind this kind of stipulation. And we'll of course have to understand from the regulator better and make it workable for us, really.
Finally, sir, in terms of timelines, I know one always draws parallel with the last round when banking licenses were issued and how long it took banks to become profitable. We're in a different environment, in a slightly more challenging world, perhaps in terms of the economic reality. So for banks that will perhaps come into being end of this year or perhaps early 2014, what are we talking about in terms of building a sustainable, profitable model in how many years?
Well, I don't want to speculate when it will happen. We are continuing business as usual in any case. The financial services business is a fairly wide area, and the opportunity in India, which is ever evolving, ever growing country, with the demographics changing positively towards people with disposable income over the last few years and expected to happen so also in the future. It's a fairly large opportunity that we are looking at, right? Yes, there are enough players present or enough and more players present over here at the moment, but it doesn't mean that a player like us will not have an opportunity, and more so given that we already have an asset size of close to 30,000 crores plus. It gives us a bit of a start. How do we really exploit the bank opportunity in the context of our existing balance sheet size is what we have to see, and we have demonstrated very good asset origination skills, fairly good operational processes which are very efficient. What we need to build is actually the liability engine through acceptance of retail deposits and taking it forward. And the good piece is that this brand has got a tremendous acceptance in the retail investors' mind. So I think all in all, it should be a very valuable and profitable opportunity thinking forward.
All right, Mr. Sivaraman, we'll leave it there. Thank you so much for joining us and getting us that perspective. That's the view coming in from L&T Finance Holdings. Just pull up the stock as well. It's up by nearly 5%. Remember, this is a stock that's almost doubled in the last 1 year itself. Just pull up the 1 year chart also, and you can see it's gathered a lot of interest on the back of the hope of the banking license. The company will actually go ahead and apply. That's 82% higher is what we've seen for the count in the last 1 year itself. One of the top contenders for the banking license as well.
Phenomenal moves, for sure. 82% up in the last 1 year. We'll take a quick break on that note.